Hello, you're watching the business headlines on HW News with me, Ali Azhar. The story of Anil Ambani can be summed up in two sentences by taking a look at his flagship company, Reliance Communications. RCom's market capitalization in 2007 was 2 lakh crore rupees, and now it is but a shadow of its former self, with its market cap standing at an embarrassing 1,148 crore rupees. In December 2018, just 3 months ago, Anil Ambani's shareholding in RCom was 53.08%, and today it stands at just 21.97%. The Anil Ambani Group's stake in its telecom arm RCom fell from 53.08% to 37.57% in February of this year, when L&T Finance and Edelweiss Group sold promoter shares pledged by the Anil Ambani Group in Reliance Communications with them, in an attempt to recover loans taken from them. Other entities as well sold pledged shares of RCom, with Anil Ambani too selling a small portion in his company during this same period. This move by L&T and Edelweiss did not sit well with the Anil Ambani promoted ADAG Group, whose shares took a massive beating in the stock market due to this action and led to a fall of 13,000 crores in market capitalization. A defamation suit was filed to the tune of 2,700 crore rupees against Edelweiss and L&T Finance to compensate the ADAG Group for fiscal and reputational loss. The Bombay High Court, however, refused to entertain the plea. Then, as recently as between 25th and 27th March, IndusInd Bank and Rattan India Finance sold 4.52% and 11.08% of shares pledged with them by RCom, thereby bringing down the promoter shareholding of the Anil Ambani Group further from 37.57% to 21.97%. RCom's troubles began in May 2018 when the NCLT admitted insolvency petitions filed by Swedish telecom equipment maker Ericsson against it, which was seeking payments of over 1,500 crore rupees. But after negotiations, an amount agreed was 550 crores. However, RCom already had a debt of 46,000 crore rupees. Amidst this crisis, the embattled promoter Anil Ambani had pledged most of his personal shareholdings in his group companies to raise loans from financial institutions such as L&T Finance, Edelweiss and IndusInd Bank. These loans are at a 50% margin. That means if you pledge shares of a market value of 1 crore, you get loans of 50 lakhs. And if there's a fall in market prices, which was the case with RCom, you need to top up or replenish this security by pledging more shares with the lenders. But if you have pledged most of your shares, you are at a dead end, and the lender is bound to sell your shares to recover the loans, as happened in case of Anil Ambani. And it is because of pledges such as these that he has lost control of his company. Bigbasket, India's leading online grocery delivery firm, has just joined the Big Boys Club and is now among the handful of startups in India to be termed as a unicorn, or a startup with a valuation in excess of $1 billion. After sealing a Series F round of funding worth $150 million, that is roughly 1,050 crore rupees, the Bengaluru headquartered company has an estimated post-money valuation of $2.28 billion, which is in excess of a twofold jump when compared with its last reported valuation of $950 million. This latest round of funding was led by new and existing funders, with Alibaba, the Chinese e-commerce giant, pumping in $50 million. In addition, Mirae Asset Management put in $60 million, and CDC, a finance group linked to the UK government, put in the remaining $40 million. Alibaba had led a $300 million funding round in Bigbasket in early 2018 as well. And with this round, the online grocer has raised a total of $1 billion in funding over 14 rounds. The fresh capital is expected to provide Bigbasket the firepower to go deeper into the online grocery segment, where competition seems to be intensifying from the likes of Grofers, Flipkart Supermarket and Amazon Pantry, all of which have lined up large investments to scale their grocery business. Bigbasket started in 2011 by Hari Menon and 4 others and now operates in 32 cities across the country with an annual revenue of 350 to 400 crore rupees. Just earlier this week, Delhivery, a Gurugram-based e-commerce logistics startup, saw its valuation topping $2 billion after SoftBank Vision Fund, the world's largest technology fund, led a round of funding to the tune of $413 million in Delhivery. This marks quite an achievement for India's startup ecosystem, as two of the country's promising startups have entered the coveted Unicorn Club in a matter of 1 week. Thank you for watching HW News. This is me signing off. Have a great day.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.